All right, everyone, buckle up. Today, we're diving into a financial move that's got Wall Street buzzing. GameStop CEO Ryan Cohen just upped his stake in Alibaba to a mind-blowing $1 billion. That's right, a cool $1 billion. Now, before you start picturing Cohen swimming in a pool of yuan, let's unpack what's really going on here. Is this a stroke of genius, a desperate gamble, or something in between? We're going to break it all down for you. So, the headline is simple. Ryan Cohen, through his investment firm, has significantly increased his position in Alibaba. This isn't some small-time investment we're talking about. This is a major bet on the future of the Chinese e-commerce giant. Remember, Cohen has a track record of shaking things up. He spearheaded the GameStop short squeeze, turning the company into a meme stock phenomenon. Now he's setting his sights on Alibaba. But why? What's the rationale behind this massive investment? That's what we're going to explore. Now, let's talk about what the analysts are saying. Surprisingly, the initial reaction has been positive. Many analysts believe that Alibaba is currently undervalued. They point to the company's strong fundamentals, its massive user base, and its potential for growth in the Chinese market. However, there's also a healthy dose of skepticism. Concerns about regulatory risks, competition from other e-commerce platforms, and the overall economic climate in China remain. So, while some analysts are cheering Cohen's move, others are urging caution. We'll delve into the specifics of those arguments. Okay, let's get into the nitty-gritty. What's Cohen's likely investment thesis here? I believe he sees Alibaba as a fundamentally strong company that's currently facing temporary headwinds. Its dominant market position, advanced logistics infrastructure, think smart warehouses and delivery drones, and burgeoning cloud computing business make it a compelling long-term investment. The key here is patience. Cohen is likely betting that Alibaba will weather the current storm and emerge stronger. He's probably banking on the mean reversion principle, a statistical concept suggesting that asset prices eventually return to their long-term average. Let's briefly define mean reversion in this context. It's the idea that a stock price that has deviated significantly from its historical average will eventually revert back to that average. Cohen is likely betting that Alibaba's current low valuation is a temporary aberration and that its stock price will eventually rebound. Think of it like a rubber band stretched too far. It's bound to snap back. But let's not sugarcoat things. This investment is not without its risks. The biggest concern is probably regulatory risk. The Chinese government has been cracking down on tech companies, and Alibaba has already faced significant scrutiny. There's also the risk of increased competition from rivals like JD.com and Pinduoduo. And, of course, there's the broader macroeconomic environment in China, which is currently facing some challenges. So, Cohen is essentially betting that these risks are manageable and that Alibaba can navigate these challenges successfully. Let's define regulatory risk. This refers to the risk that changes in government regulations could negatively impact a company's business. In Alibaba's case, this includes potential restrictions on its e-commerce operations, its financial services business, and its data collection practices. Many analysts use a discounted cash flow (DCF) analysis to value companies. DCF involves projecting a company's future cash flows and discounting them back to their present value. If Cohen believes the market is underestimating Alibaba's future cash flows, his DCF model would likely show a higher intrinsic value than the current market price, justifying his investment. A relevant academic paper to consider here is Behavioral Finance and Market Efficiency by Andre Schleifer. This paper explores how psychological biases can lead to market inefficiencies, creating opportunities for savvy investors like Cohen to capitalize on undervalued assets. It suggests that emotions and irrationality can drive prices away from fundamental value, offering potential gains for those who can identify these mispricings. Now let's look at two opposing viewpoints. The first argument is that Alibaba is a deeply undervalued gem. Proponents of this viewpoint to the company's robust revenue growth, its massive user base, and its leadership position in the Chinese e-commerce market. They argue that the current valuation is a temporary anomaly caused by regulatory concerns and macroeconomic headwinds. They believe that as these concerns subside, Alibaba's stock price will rebound significantly. The opposing argument is that Alibaba is a risky proposition. Critics point to the ongoing regulatory crackdown in China, the intense competition in the e-commerce market, and the potential for further economic slowdown. They argue that the risks outweigh the potential rewards and that Cohen is making a dangerous bet. They might even suggest a black swan event could further tank the stock. So, how can we verify which argument is more likely to be correct? One method is to conduct a comparative analysis. This involves comparing Alibaba's valuation metrics, e.g., price-to-earnings ratio, price-to-sales ratio to those of its peers, such as Amazon and JD.com. If Alibaba's valuation is significantly lower than its peers, even after adjusting for risk factors, it could suggest that the stock is indeed undervalued. Ultimately, Cohen's bet on Alibaba is a high-stakes gamble. He's betting that he can navigate the regulatory and economic challenges in China and that Alibaba will emerge stronger. He's also betting that the market is underestimating the company's long-term growth potential. If he's right, the rewards could be substantial. But if he's wrong, this could be a very costly mistake. What do you think? Is Cohen a genius or a gambler? Let me know in the comments below. The implications of this investment are far-reaching. If Cohen's bet pays off, it could signal a renewed confidence in Chinese tech companies and attract more foreign investment. It could also validate his reputation as a savvy investor and further cement his influence in the market. On the other hand, if the investment fails, it could raise questions about his judgment and potentially damage his reputation. Only time will tell how this plays out. So what's the takeaway? Ryan Cohen's $1 billion bet on Alibaba is a bold move that's sure to keep Wall Street on its toes. Whether it's a stroke of genius or a risky gamble remains to be seen. But one thing is for sure, it's a story worth watching. Now, I want to hear from you. What are your thoughts on Cohen's investment? Do you think Alibaba is undervalued? Let me know in the comments below. And don't forget to like and subscribe for more in-depth analysis of the latest tech and finance news. Thanks for watching.